Members of the public have until the 31st of August, that is Sunday next week, to submit comments on the credit guarantee regulations published by the National Treasury. The credit guarantee is being set up by the National Treasury and the Central Bank to help stimulate access to credit among the micro, small and medium-sized businesses which are often locked out of commercial bank lending. Here is the breakdown of some of the key issues in the draft regulations. According to the draft regulations, the day-to-day operations of the scheme, which targets businesses whose turnover does not exceed 5 million shillings annually, will be undertaken by a scheme manager and staff appointed by the Cabinet Secretary of the National Treasury. The fund will draw its capital from allocations from the National Assembly, income generated from proceeds of the scheme, grants and donations, as well as funds from any other source which may be approved by the Treasury Cabinet Secretary. The scheme shall be administered by a committee to be known as the Scheme Steering Committee, which shall consist of the Treasury Principal Secretary, the Principal Secretary from the Trade Ministry, the Attorney General and the Governor of the Central Bank, among others. To guard against misuse of the scheme, directors of micro, small and medium-sized businesses which give false information while pursuing credit guarantee from the scheme will face a fine not exceeding 5 million shillings or 2 years imprisonment or both. The scheme will also be entering into a written agreement with each eligible financial intermediary such as banks and microfinance institutions before the financial intermediary is allowed to participate in the scheme, which shall specify how the financial intermediaries will participate in the program. The participating financial intermediaries will not be permitted to use more than 1% of guaranteed funds available on any single individual, micro, small and medium enterprise.